Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on Friday's action, we saw a sharp surge above 3,500 again, but the market reversed at the end of the session to close back under 3,500, but above that pivot number that I talked about at 3,461. Now the futures sold off sharply after the cash closed, but we've already reclaimed that territory tonight as the futures are up about 0.5%, reacting to the politicians again this week, saying they're still working on a deal before the election. Pelosi has given an ultimatum of 48 hours to the administration to come up with a deal. The reality is, as I've been telling you, is this is all posturing. This has nothing to do with really doing a deal. I don't see this thing happening. And this is what I've been telling you they're going to continue to do. But regardless of that, market participants seem to buy into this. At least the algorithms are generating some buy signals. But as you'll see when I go through the technical section here shortly, there's still a minor uptrend on this market as we continue to hold some key support levels. I'll go through all the details here in a few minutes in the technical section. But as we look back on last week in general, we saw the markets actually finish higher. NASDAQ up 0.8, the S&P up 0.2, but the Russell was down 0.2. Basically, that action was non-material, and there was no real signals of an acceleration of the trend, just a continuation of what I've been talking about in this broad sideways trading range. But as we go forward this week, we start to look at some of the reports coming out. There once again isn't a lot, but we are going to be focused on the housing report that comes out. We got housing starts and building permits coming out. That is one of the hot spots in the economy, and market participants are going to continue to focus on those numbers that come out of those reports. The only other thing that we really have this week, once again, the claims expected to show 875,000 increase, and the continuing claims continue to decrease. In fact, we're about 50% from the peak above 20 million just about 3.5 months ago. So we're continuing to see that number drop, as last Thursday it was reported to be at 10.01. If that number comes in below 10 million, which I suspect it probably will, you're going to see a bullish reaction, or at least a supportive type action in the markets. This week is likely to continue this choppy range. As I mentioned a minute ago, there's definitely an underlying uptrend, and I continue to see this thing just grinding out up here, remaining above key support levels. Let's go ahead and take a look at the charts, see how this week is setting up. As we review the WaveTech database, I want to take you to PortfolioXpert.com, and you can set up a free account to see this dashboard, but by clicking on my account once I've set this up, I can get into an overview of the database, and I can look at it based on equities, ETFs, and mutual funds based on our database, which has about 16,500 symbols in it. And one of the things that you see, there was virtually no activity. There was a net sell of 124 symbols and only 91 buy orders. So on a weekly basis or intermediate trends, not a lot changed. But one of the things I want to review with this is to look at the overall patterns that are unfolding as we go forward. Now, if we look at the individual sectors, we see still a rotation, but most sectors are above a 50% bullish. As I've been talking about on an intermediate level, our database is 65%. As we look here, equities are at 52%, ETFs at 52%, very similar, and mutual funds are 65.59%, and this mimics more of our broader database. Looking at here, if we go down lower on this chart, the individual groups also continue to show that around a 50 to 70% bullish percent on a lot of these. We can see retail home furnishings off the map 100%. If you're following the housing boom, home furnishings are up at 80%, home improvements 100%. But you can go through and review all these different groups. But you can see for the most part, a lot of the primary groups are up around 50%, just like in the sectors. As we review the WaveTech database, we'll start with the intermediate. You can see we're at 65.19% bullish. And one of the things I want to point out, that a lot of the sectors started to come on in June and then again in July. And a lot of these sectors have done quite well. Consumer cyclicals done well, up 25%. This is on a sector basis. These are proprietary indexes that come from our database. That basic materials is one of the lesser ones, but consumer non-cyclical, consumer cyclical are a couple of the sectors moving really well, and then services as well. So that shows you where the rotation is in a lot of these stocks. And you can drill down in these. But basically what I want to point out here, there is an intermediate bullish sentiment that will continue. As we look over on the far left, you can see that the current average duration is 51, and the percent fulfilled is around 25% of the expected time holding in these models. If you're new to the channel, every buy signal that comes out of our database actually has a map or an expectation map attached to it. So you can see how accurate it is. You can also see on balance how long that the models will hold. So what this tells us, the average holding is 203 days. We're 25% through. There's still 150 days looking forward on average for a lot of these symbols that we currently are long on. So there's a lot looking forward somewhere into Q1 or beyond that this market is likely to continue in a generally intermediate bullish tone. As we go through the short-term database, you'll see that there were about 400 new buys, but about 320 sells. So we had basically still a rotation going on here. We've upticked just a little bit. We dropped back to 34%. And the number that I continue to watch for here on the short-term database is 42%. So we've upticked to 36.44% bullish. If we go over 42, then there is a possibility for the markets to start to move higher in this pattern. I've been talking about this for a while. I don't expect to see this market break out and make new highs before the election, but anything's possible. And if we see this rotation, then it's going to tell us that's exactly what's going to happen. For right now, expectation is still for it to grind out until we see some of these metrics come into play. As we review the S&P futures, you can see they're up 0.54, up 1875 on the session. The high has been 8250. We're currently trading at 81, so we're printing near the highs of the day. But as I mentioned in the opening comments, there's still an underlying bullish trend, and that is illustrated here with the PPM1 at a 0.25, and also the 10-period moving average continuing to represent major support. Now, I mentioned on Friday's video that 3461 was a key number. Well, that is what the 10-period moving average is on the futures today, 3460.75. That's going to continue to be a critical level. Now, some of the cautionary patterns that are flowing around this market right now is that the PPM1 has actually crossed through its first derivative. It's still positive, but we're starting to see some negative signs. But the PPM2 is actually accelerating, which all that is telling us is that the major support is down between the 33.99 down to the 33.84 level. I don't see those numbers in play, but as we look at the market grid for the futures, you can see where the key numbers are also S1 34.50. The way we're trading right now, we probably won't see an S1 trade. Most likely the market should top out today around R2. We could trade all the way back to the 35.01, which would be an R3 print. But all the details that I want to go through in tonight's video are on the cash markets, as I'm going to look at a little bit longer term viewpoint. As we begin to review the S&P cash, the SPX on a long-term basis, and we're looking back to 2015 right now, but this most recent pattern that we've seen this year is actually very bullish. We're seeing PPM1 at a plus 0.81, PPM2 is 1.23, and PPM3 is 0.93, and even the PPM 200, which is a 200-month moving average, is at a 0.66. So everything is in trend mode, and this is what I was referencing, that there's an underlying trend on all levels right now on a monthly basis, a weekly basis, and a daily basis. and the PPMs are all maintaining a very bullish profile as far as the longer term charts go. As I just discussed in going over the intermediate database, tells us there's at least another 4 to 6 months of higher prices, which would suggest this bar chart will continue. This is a monthly bar. Start to see some acceleration, most likely after the elections is what it looks like it's set up for. But this is a bullish pattern. Everything here, the PPMs, the moving averages, the configuration, market grid as well. If we look at the market grid for the month of October, 3563 is R3, so we've traded just about an R3 monthly. We're just a little bit over mid-month in October, so we could continue to print up. The RXT is 3625, but I think this 3563 level will represent the top end of this market. Now we're trading at 3483 on Fridays. It's just about 100 points to get to that level. As we go down the spectrum and look at the intermediate charts, top end of the range was R3 3557 with the extreme of 3582, which is a retest of the all-time high. And we did print to the 3549, so we fell just short of an R3 weekly. But as we look at the weekly grid for this week, it's a very similar number. 3587 is RXT, R3 is 3562, and then 3535 is R2. So it's likely from a weekly standpoint, we're going to see an S1, maybe an R2 range this week, especially at the positive tone that we're starting this week. But as we look at PPMs, now PPM 1 is below its first and second derivative, but overall we're in this maintenance mode on the trend. So the PPM 1 is at a plus 0.39, PPM 2 0.77, PPM 3 is the least amount of bullishness in the market at 0.17. So anything over 0.25 is a bullish trend. And this would also suggest, as we look at the 10-week moving average, that 33.97 will be the extreme floor in the markets. No matter what happens, even if we were printing below the 34.60 number that I mentioned a few minutes ago, 33.97 will be a major support level. I do not see us getting below that level. As we look at the daily trends, you'll see that we also have on the cash a 0.39 bullish trend on PPM 1, PPM 2 a 0.17, PPM 3 0.07, so there's not a big robust uptrend, but 0.39 suggests there's only a 30% probability to trade below the 34.6150 level, and that number is rising roughly 14 handles, so that today will be 34.75. So the overnight action we're seeing in the futures up 18 is going to get us to open up above that 10-period moving average, and that's going to be major support, and will maintain at least a 0.25. So this level is going to be critical at 34.61, and once again the 3400 or 33.99 level is going to be major support. The next market I'll cover is the NASDAQ. The next market I'll cover is NASDAQ futures. Very similar configuration. The PPM 1 is at 0.37. The 10-period moving average, 11,774. The low so far, 11,816. That's going to be your major support. And the market grid, though, is very tight because we're trading near R2 right now at 11,023. There's still some more upside here, but R2, R3 is likely to be the extreme on the daily charts here. Just like with the S&P, is not a very good chance right now that we're going to print down to S1, which is 11,738. As we look at the weekly, there's a little more to be revealed here. PPM 1, 0.68, 1.04, and 0.71. So we have a very robust trend. 11,482 is the 10-week moving average. That's the absolute floor on any sell-off. Don't see us getting down to that level, but that will be an important number to note. But on the upside, we're looking at 11,921 is going to be R1. So it's possible if we got above R1 that we could print up to R2 to be 12,059, moving up into the upper end of the grid. Next market I cover is the US Dow. The Dow continues to hover around the 10-period moving average. It's at 93.35. The low overnight so far has been 93.66, high 93.77. And we're going to be sandwiched between the 10-week moving average and the 21-week moving average. So 93.35 will be the floor, 94.62 will be the top end. Now it's likely we're going to continue to move this market toward the upper end of this range, at least into the 94.62 range over the next several sessions. And I don't see us getting much above that, but if we look at the market grid for this week, you're going to see that it coincides with that number. R2 is 94.17, R3 94.42, with S1 93.45. So we've already seen a low of 93.66. Look for an S1 R2 range for the Dow this week, with the potential of going up to R3 at 94.42. Next market I'll cover is gold. Gold continues to be in the same configuration. We're locked in this very narrow sideways range. We are starting to see the potential for the PPMs to turn up on a short-term basis, but we're going to need a close above 1956 to make that happen. And right now, it doesn't appear that that's likely to happen, at least for the next several days, especially with the potential upward strength in the Dow. But the downside also appears to be limited, and the best chart that we can look at to really get this pattern nailed down is on the weekly graph. As I've been discussing over the last month, we're locked between the 21-week moving average and the 10-week moving average. Now the 10-week has moved down to 1927. It has a negative PPM1 at 0.25, which tells us there's only a 40% probability for it to go above that number. On the downside, the support's at 1887 now, with the upward slope PPM at a 0.39. This range is continuing to squeeze down. The next 2 weeks will be important for gold, as it looks like it's getting squeezed into this pattern. There still is, on an intermediate basis, an uptrend, but that supports at that 1887 level, and we printed down there in the last 3 weeks and we rebound. So we're getting closer to this pattern breaking out. As long as we remain above this 21-period moving average, 1887, in this week, we're going to see this market attempt to move up to and possibly get above 1927. I don't see that happening at least until Wednesday or Thursday, depending on how this pattern sets up. So I'll continue to update that. But the general trends in gold are still up on an intermediate basis. This is what's maintaining this market right now and keeping it in this very tight trading range. This will complete the video for tonight. Thanks for watching. I'll talk to you tomorrow night.